Hi, I'm Len Kiefer, Deputy Chief Economist at Freddie Mac. After many fits and starts, the data are finally showing that not only are more Americans taking out a mortgage to purchase a home, but overall mortgage debt on single-family properties is increasing on a year-over-year basis for the first time since 2008, and we're expecting that trend to continue. This is yet another sign the economy is beginning to normalize and housing markets are continuing to heal. Another sign is in data that we compile at Freddie Mac showing that when a home is sold, the amount owed on a new mortgage by the home buyer is up about 30% higher than that which was retired by the previous home buyer. For the past several years, that number has been much lower as a result of weak to negative house price appreciation. But now home sales are on the upswing, cash sales are declining, and house prices continue to rise, all while more Americans have the financial capacity to take out a mortgage to buy a home. Some immediately jump to the conclusion that this means the home ownership rate will start to rise. It's a topic discussed much, as June is National Home Ownership Month. The reality is demand is unlikely to trump demographics for several more years to come. Rarely does a week go by where there's not a new study or survey showing that the majority of millennials aspire to home ownership. But many miss the obvious point about demographics. Gen X is smaller than the boomers, who are smaller than the millennials. Put another way, those with the most money to purchase a home are retiring and buying less. Those hardest hit by the Great Recession are recovering, but not big enough as a group to make up the difference. And the biggest cohort, the millennials, are just now entering their earning years, so most of them are renting. The oldest set of millennials are forming households and looking to take out a mortgage, but we're just at the beginning of that trend. In normal times, mortgage debt grows as house prices rise, new households are formed, and those households take out new mortgages. So by definition, we're at the beginning of this normal times once again. We're also seeing investors' appetite to purchase mortgage bonds coming back, including being very interested in Freddie Mac's industry-first credit risk transactions. The key thing to know is that we're at the very beginning of this cycle. The economy is improving, the labor market's doing a lot better, and we're starting to see the positive demographics kick in to help drive home buying and home sales in the mortgage market. But it's going to take time to get us back to a fully normal market. But we're getting there. Thanks for your time. We'll see you next month.